Hey, what's up, guys? Welcome back. So, today is December 20, and it's the next day, continuing my journaling reviews of like every day. I try to take a trade or two, just using the DXY, which is a dollar index, to trade the QQQ stock index, right? So, I'm trying to build a consistent, profitable strategy or profitable edge in the market. I'm trying to find that and try to just understand how I can really spot opportunities in the market for myself. So I'm trying to build the entire strategy and have a great understanding of what the candlesticks mean and just to experience it. So I'm documenting the entire process. Hopefully you'll find value in just having the whole archive of videos as I take a trade every single day that the market is open based on my specific either system or confluence, and I'll just show you how that basically goes. Let me pause. So here we have my platform that I use, which is Trade the Pool. You'll see, if you want to actually try and use this platform, you'll see a link to it in the description. You can try it out, and I get a kickback as an affiliate if you actually use the platform and like it. But Trade the Pool allows you to trade stocks, and you can get funded to trade stocks, meaning they will give you, if you have the skill set, which is what I'm trying to build, they will give you 100,000, 200,000, $1 million to trade. And if you can make 1%, 5%, you'll get your payout once the skill set is there. So that's why I'm focused on building the skill set and not trying to get lucky. I'm trying to have something that works 5 times a week, and if I'm wrong, it's just part of the system. If I'm wrong, it's just I'm systematically wrong, and it actually pays out in the long run. So let me show you the first trades of the day were these, and just a disclaimer, the dates are wrong. I'm trying to speak to the platform about fixing the dates and trying to give me the EST time, but I'm not sure why they're lagging on that. So the first trade was a buy on QQQ, right? So you see I entered the trade at 9:32. So at 9:32 I entered for a buy, right? So let me see where this met up. So this was Tuesday at 9. Okay. So entered for the buy. Why I entered for the buy here was I could see that the dollar was forming some level of resistance around here, and then it basically did a long wick up pushing down, which is kind of a bearish signal. So if you have a bearish signal on the dollar, I'm believing you're gonna have a bullish signal on a bullish move on the QQQ, because the QQQ is an index of stocks. So I had the bullish move, yes, right? Had the bullish move. Let me see where I entered, because where's the 9 o'clock candle? This is the 9 o'clock candle. So we did have that really bullish move, right? As you can see. However, it was this long wick down that got me out, and I'll show you. And I actually find it fun because actually I entered the trade, I stuck to my system. I knew there was a possibility for me to get wicked out, and I actually did. But if I had set my stop loss a little bit lower, which would have been against my trading plan, I wouldn't have been hit out. So it's just something to note. And also note, if I had reduced the amount of quantity I was trading, that would have allowed me to have a larger stop loss, and at the same time I could just capture this profit as well from that move. So let me show you where I entered today. So you see where I entered on the dollar. You have you basically have two touches of the resistance here. So you could see that the dollar was going down, and then on the QQQ you can see the QQQ reacted to that, had a push up, but that long wick is where It's just that's what got it really tricky. So this is the 9 o'clock candle, and I'm on the 1 hour. 26834. 26834. So you see that 26834. So right around there, 26834. 26834. So I entered for a buy here, and then my stop loss was set. You know, I like to keep the stop loss pretty small, so I had a $22 loss, and then it hit me out at 26730. 26730. That's pretty funny. So look at that. That was the move. I mean, I would still have to come under 267 for me to not get hit out. However, it actually shows me that there was some confluence there. There was something that I could have profited from if I didn't get hit out at the stop loss. So if I had went into this trade with no stop loss, I would have been able to get all of this profit, which would have been 268 to 270, around 60, between 60 to $80 profit there off 20 shares trade right there, and that's within an hour. So that's basically what was the first trade. That was a loss of $23 total, 1.5 for the transaction, 22 for the trade, as it hit my stop loss, and I was okay with that. So the next one I actually did get it right. I entered again, but I still went with lower shares just to ensure that I wasn't stretching myself too much, especially on a trade when you feel like you're chasing. You would not want to stretch yourself too thin. So this is 10:15, so this is GMT time, we're in EST time, right? So 10:15, so that's on this candle, and 26957. Was that the open of the candle? No, it's around the middle. 26957, so it's right there. So this was where I opened my position, and then let me see where I closed it. I closed it at the level of resistance that I had drew up from before, and as you can see, the resistance was respected here even in after hours. And then previously you can see the resistance being support here, it being some level of resistance here, which is why I chose that as a point to get out of the trade. So I basically had my take profit right there. As soon as it began to go up around 15 minutes, I was out of the trade. I wasn't even focusing on the trade. The trade just ran, did its thing. I was out, which is fine by me, because if I had not been out, as you can see, I would have taken all of this drawdown. However, I still had my stop loss set, so my max loss on this trade was actually $10. I could have lost on this trade. I didn't plan to lose any more than $10 to bring me to, what's that, like $30. But as you can see, for this week we've had 3 wins and 1 loss. So I'm positive for the week, and let's see how tomorrow goes. Tomorrow's a Wednesday, it's quite choppy. We'll just see how that goes. I'm probably gonna keep the risk small, and probably if we get that move, I'll take it. If not, I'll just get hit out at my stop loss for a loss of around $10 or $8. But we want to have consistency. That is my main thing. Consistency, stick to the system, and get this right so that we can trade for a living and live. Just do some things that we really wanted to do, like buy the nice cars, buy the nice house, take care of your family the real way, like do some real stuff. So that's why I'm trying to trade and just get this skill set really down, get everything done, and I'm just putting so much time into it and just being as transparent and trying to show this value. But otherwise, something else happened today that was important. So it seems like Bank of Japan, so let me show you an article from the New York Times. So in a policy statement, the Bank of Japan said it would allow the yield on its 10-year bonds to move in a range of plus or minus 0.5%, broadening the band from 0.25%. So essentially, Japan is raising interest rates, right? And Japan does not usually raise interest rates, which is funny. So when Japan raises the interest rates, the Japanese yen becomes stronger. So when it becomes stronger, you'll see a reaction as it relates to all of the other currencies. So you'll see this is the USD Japanese yen. So this shows you the strength of the US dollar against the Japanese yen. And today, of course, if the Japanese yen got stronger, you would see a reflection here. If you want to do it on a different one, you'll probably see the exact same thing. If you go to what INR and JPY, which is the Indian rupee, you'll see the same thing. The same thing, because as a country decides to raise interest rates, it makes their currency stronger, and then if one currency gets stronger against another, it actually reflects as like this on a forex chart. It reflects, if you were to flip it around now, you'd see how the Japanese yen reacted to the US dollar. This would basically be the Japanese yen getting stronger. And this is a 4-hour chart. If you were to put it on a 1-hour chart, I'm sure it would look more, you see, it looks more extraordinary. It looks like a more gigantic move. But that's basically it, what happened today, guys. I'm not sure how it's going to reflect going forward, because I've never seen anything like this. But it's great that we can experience everything like this and just take note of it. This is the stock I think I'm gonna just start buying, just just to put it out there. I'm gonna buy more Tesla stock. All right, that's basically it, and I'll see you guys tomorrow, December 21st. Bye bye.